Hey guys, Nicole here with Momentum Accounting. In this video, I'm going to be explaining what GAAP is and then talking about when you need it for your business. So GAAP stands for Generally Accepted Accounting Principles. Think of it as the universal language for accounting. So that way, if you were to look at a set of financial statements that are on GAAP basis for a certain industry and you compared it to another business in the same industry, you'd be able to compare apples to apples. And it's all about recognizing revenue in the period you earned it and matching that with your expenses in the period they were incurred. I won't go too much in the technicalities. So if you've ever had a CPA friend who you go to and you want to ask them about taxes and they're like, I don't do taxes. What they might actually do is they might be an auditor. And so typically what auditors are doing is they're going into a business or nonprofit and they're checking to see that the financials are on GAAP basis. And typically a business needs to be on GAAP basis and get an audit if for a few main reasons. So one would be they have investors, and the investors, they're putting their hard-earned money in there. They want to make sure that you're not doing any funny business in the financials. So they require you to hire a third-party auditor to come in and do an auditor review. A review is just a lesser version of an audit, a lighter version. Sometimes banks, if you have a big loan with a bank, they'll require some sort of review or compilation. Compilation is a lesser version of a review, so it goes compilation, review, audit. Another reason would be if you are selling your business, sometimes it's a good idea to get a review. So then you can, it basically builds credibility with potential buyers having a reviewed financial statements that are signed off by a third party that you then present potential buyers. And then lastly, nonprofits. A lot of nonprofits are required to get an audit just because, they're taking in money from donations and other reasons. So yeah, you want to have a third party verify that they're not doing anything weird. So those are the reasons that you need GAAP financial statements. On the other end of that is most businesses, which are under $1 million in revenue, and they're typically on cash basis, which means that they're recognizing revenue as money comes in and recognizing expenses as the cash goes out. Most small businesses file their tax return on cash basis. In between that world is an owner-managed business that is, so typically I say, if you do over $1 million, once you hit the $1 million mark, you should switch to accrual accounting. And so what we do at Momentum is we're using GAAP methodologies, but it's not like, unless the business is one of those three, we don't work with nonprofits, but if, when we first start talking to a prospect, we always ask them how they use their financials and if they have investors or are required to get an auditor review. Because if they are, we know we need to do like full GAAP. But most small businesses, we are just more focused on making sure that the revenue and the direct costs line up, and then we can start looking at margins. Because at the end of the day, most small businesses, it's just the owner looking at those financial statements. There's not a third party that relies on them. So we want to build the financial statements in a way that helps you as a business owner be able to manage your business to your margins. And so for example, one thing would be depreciation, right? There is GAAP depreciation and tax basis depreciation. So what we'll do most of the time is we'll just take the depreciation from the tax return and use that because it doesn't really matter. Like it's going to be extra work for us to just go recalculate the depreciation on GAAP basis. So my point with all this is if you're working with an advisor who understands how you use your financial statements and make sure that you're talking about that during the sales process, because ultimately every business is different and how you use your financial statements is different. And if you've outgrown the need to just do your books to file a tax return, that might be an indication that you need to move to accrual basis accounting. And so anyway, I know it's super confusing as a business owner, but just be aware that there's a lot of different ways that you can do accounting. You can get very creative with accounting. What you don't want is to get in a situation where you're like overpaying for GAAP financial statements, or you should be using GAAP financial statements or some sort of accrual. So anyway, I'm Nicole. I'm the founder of Momentum Accounting. I am a recovering CPA, and our company, Momentum, we are a fractional accounting department for small businesses, typically $1 to $10 million in revenue. If you'd like to learn more about what we do, you can go to momentumaccounting.com, and I'll see you at the next video.